Today's video, we are going to look at the power of the Doji candle and how to use it to find perfect entries in forex trading, and it works in both the forex market, the stock market, the crypto market, and the indices. All right, so we are going to look at what it is and how it works and how you can use it in forex trading. Right, so let's go right away to the Candlestick Trading Bible. It has a lot of content you can go through and read, and let's go straight away to the Doji candle on page 20 right away, and we read through and we know what we can understand by the Doji candlestick pattern, right? The Doji candlestick pattern, and he's saying a Doji is one of the most important Japanese candlestick patterns. When this candlestick forms, it tells us that the market opens and closes at the same price, which means that there is equality and decision between buyers and sellers. There is no one in control of the market. And as you can see here in this picture, we see that the lowest price is here, the highest price is here, and the closing price is the same as the opening price. So then it signals that there was indecision in the market. Both the buyers and the sellers were unable to decide. Their power or the negotiation power was the same. So when it appears at the end of a trend at a resistance or a support, it signals a reversal, and a confirmation would be waiting for the next candle to see where it will close. But I will disclose more techniques as we move on in this video, so don't miss out. And if you are already liking this video, or if you are enjoying the type of content I'm delivering, kindly subscribe, turn on the notification bell icon, and like my video. Right, so let's continue. As you can see, they are saying the chart above shows how the market changed direction after the formation of the Doji candle. So mostly when these candles appear at the support or resistance, they signal a change of direction. However, we shall also see where it appears in the middle of the trend. In that case, it will be showing what you call trend continuation. All right, if you are new to trading, you may need this book in the future, and this one will explain the entire candlestick patterns. It is a nice book, and that is where I started from. You can read it through your free time, and you can get it for free. Just join my Telegram group and request it. You will be able to get the book. Okay, so this is the book, and you can see the contents. Right, you can see the morning star, evening star, the hammer or the pin bar, how to use it in trading. Right, and it has very many pages, up to 168 pages. If you haven't seen it, you will be able to get it for free. Okay, so get yourself equipped with knowledge, and you will be able to excel. Okay, in forex, all that is needed is knowledge, not the capital, although it is required, but the most important thing in forex trading is getting the right knowledge to trade the markets. Okay, so this will help you to interpret the charts, especially the candlestick charts, be able to know what the buyers and the sellers are doing, the market participants, and getting to know entirely the language used in forex trading. Okay, all right, let's continue with the video. Right, let's go to this VIX 50. We are on H1, and we are trying to look at the Doji candle, and you can see these are the Doji candles. There are very many in here. You see, now this bullish candle closed above this moving average, and you can see the Doji candle are closed above the moving average as well, while leaving the rejection wicks below, and that signals that price is heading upwards, right? What we are trying to mean is that some doji candles which appear in a continuation, a trend, or in between the bars, they signal that the trend is continuing, or price is continuing that direction, and in this case it is continuing moving upwards, right? The other thing here, right, you can see where we can use the doji candle is here. You see price was struggling to move down because it started here by rejecting this high right here. So once it continued rejecting, we see these bearish candles overpowering the buyers, these two. So when price reached here, we only see the doji candle appearing once again, right? Can you see this doji candle, the bullish doji candle, which is rejecting this moving average, and price went down. Another doji candle which signals about that price is continuing is this one, right? So let's go to M15, assuming that you had already drawn your resistance zone up here, right? Let us see here. You had drawn your resistance. Price here has already retested this area. When price has reached the resistance area or the support area, then you see the doji candle. That one also signals a reversal, not a continuation, right? I repeat, when you see the doji candle, when it is on the resistance or the support zone, it signals a reversal. However, that shouldn't only be the case. There are other factors we consider, like the confirmation or confluences, right? So you see this bullish, rather bearish candle, which has overpowered the doji and closed below. Then the buyers tried to push up, right? We are talking about these ones, right? We are talking about these buyers. They tried to push, but they couldn't exceed here, right? So we see another bearish candle here. So let's go to lower time frame to see if we could find an entry. Let's go to M15, right? So when you go to M15, guys, you see the magic that happened about the doji candle. It is just right here. So the bearish candle, that big bearish candle which overpowered the rejection in here, right? You couldn't wait that maybe price will come back and maybe find your entry here. No. Rather, you look for a doji candle in between, within the moving average, and which has not closed above the moving average, and at the same time it has not closed above the other bearish candle. It is within the moving average. At the same time, it has not exceeded this area, the rejection area, right? Which means sellers are in control. So once you reach there, you can place your entry and put your stop loss just above here, right? Okay, and you can target now this is the entry. Okay, you can target 1 to 2, and that is around here, this region, so you can find your entry. Another thing you could be targeting is this area, right? Let me show you. When you see this gap, fair value gap, you can as well target it and you take your profit here, right? Okay, that's it. And if I can continue, maybe let me go to 1 hour and I continue showing you more examples about the doji candle, how it works. You can see when you look here, as I told you here, this doji candle, you can find that it happened at around a support, not specifically support, but that area is for, there is something like a head, an inverted head and shoulder, right, where we have this as the shoulder left, This is as the head, then this is the right shoulder. So when you see this doji candle which is appearing on the right shoulder, then you can anticipate that price will continue rolling up. Okay, so let's go to H4 to see if there are doji candles, right? Okay, you can see the doji candle is here. Here you would think that price is rejecting because it is around the resistance zone, but what you do, you just wait to see the next candle. Is it going to close below or is it going to close above? It closes above, it means that the buyers are overpowering the sellers, right? Okay, another thing, okay, we can look at another doji candle which is like inverted in here, right? You can see it here below the moving average. Okay, so in that case, where can you target? You can target these lows, okay, you can target these lows as your TP here. Okay,